Hi, this is Tom the Trader. I just wanted to get together for a little bit this weekend and talk about the weeks to come. As you know, we've gone through quite a period of time for those who've been trading and investing over the last decade. We've gone through just a tumultuous time as, again, all of our economic indicators and really worldwide indicators have kind of gone to kaput over the last few years. We've dove down into 2 to 3 major bear markets, and now we've embarked on one of the greatest bull markets of all times, going back to the 82-83 period. But what I wanted to get with you about was, again, the basics of TTTHedge.com. We really work on 3 basic principles. Number 1, the Fed. And as everybody knows, the Fed has had an unbelievable time of it this time around. Usually it's just interest rates. Now they've had to go on to quantitative easing, what we all know as QE2, and there's even talk of QE3 in the municipal bond area, etc. But that's one of the biggest components, as Marty Zweig used to say. The Fed does write the story on the stock market, and we believe that here at TTT Hedge to be true. So where are we at with the Fed right now? We're coming into June. Seasonally, the stock market usually discounts 3 to 6 months ahead, so more or less we're at the end of QE3. So this is more or less the economy getting its training wheels off. So the Fed has been just absolutely never before in its history been so accommodative and been looking actually at the stock market to help it proceed with its goals, which is getting the economy back in good shape, getting banks in good shape, and getting out of this horrible decession that we've gone through. So number 1, the Fed is on our side, there's no doubt about that. But how long can that last? The stock market in this latest correction of 7 to 10% has said, okay, what's their next move? How long is the Fed going to stay on our side? But you got to right now put the Fed deeply in the bulls category. Number 2 is the tape. Again, the tape, advanced decline line, up, down, volume, there's a million ways that we track it, but the tape is definitely on the side of the bulls. Did we take a hit in this last correction? Should we have taken a bigger hit? Probably, but the fact is the bulls have the tape also in the direction. So when you look at the overall macro picture as far as the stock market, U.S. stock market itself, we've got 2 main areas that are deeply entrenched in the bull category, and that's why we've had such a fantastic bull market. Pretty much doubling. The average stock has doubled in 2 years, and we're looking at blue skies right now for all the indices. Again, just now this week, the Russell and the transports have broken out to new bull market highs, which is extremely bullish, especially for the long term. The final of our 3-legged stool is the sentiment area. Sentiment, again, is a big portion of what we do here at TTT Hedge, and quite frankly, we've been wrong on sentiment. Sentiment has gone to extremes all throughout the last 6 to 9 months since the Jackson Hole statement by Ben Bernanke. And the market has gotten extremely frothy without giving much back. And finally the market did cave in, and we did have a correction. It was mostly from a sentiment standpoint, as froth and speculation has gone to really outrageous levels, even considering 1999 and further back. So we've got 2 of the 3 legs of the TTT hedge fund props doing extremely well. Now we're going into earnings season. Again, under tape indicators, I look deeply at earnings. As Larry Kudlow from CNBC would say, earnings are the mother's milk of the stock market, and we need to have earnings to really come through. Last quarter we said, boy, we're right there. I mean, we are at the tipping point of the highest corporate profits ever in the history of man. Again, nothing could have been better. We had the Christmas season under our belt, etc. Now we're moving into a little bit of a tougher period. I believe that margins have peaked. I believe that earnings still can come through and can make corporations, again, another solid quarter. But I think that we're right at the top of this. So again, it gets to be a dangerous time especially in the very short term as earnings confession season comes on and we get our first earnings reports out this week. So again, overall the market, we believe that we are still in a cyclical bull market compared to a secular bull market, but that a secular bull market could come out of all this if we did have a 10 to 20%, even a 30% correction later on in the fall. But again, we can deal with that when it comes. I tell most of my clients right now that they should be 75% invested and add on the dips on 1 to 3%. And I think that's good for right now. For the very, very short term, though, I'm very concerned about earnings. That's why TTT Hedge is having a special seminar, webinar this weekend and into next week. So stop by ttthedge.com and take a look. Also, we're having a $100,000 challenge, whereas we're taking a couple of futures contract, trading them daily. For those folks that like to trade futures on a daily basis, come by the room, see what we're doing, and I think you'll be surprised how folks, small investors, can get in the market with futures and options and have a pretty good run of it. Again, option season coming up. It's going to be a very exciting time with earnings. Again, we want to teach you how to play the options market and the futures market and do it the right way. Again, the TTT hedge fund way that we've been doing so successfully over the last 8 years. Again, this is Tom Malone with TTT Hedge. Stop by this week for a special webinar on earnings, and again, we hope to see you soon. Thanks for being here. Take care.